The S&P 500 and the Nasdaq dropped between 4 and 6% overnight in the Asian session as the VIX shot through the roof to record levels. What the hell happened here? I promise you this will be the most concise, complete, understandable video that you will find on this topic. And more importantly, are there opportunities for us here? Because as you guys know, extreme situations usually birth opportunities. And, panic doesn't make anybody any money. So let's get right into it. And I'm going to go over all this as well as some of the moves that I made today. All right. So with that said, what happened with the USD JPY, right? This is the Japanese yen compared to the US dollar. You can see here that the Japanese yen has been weakening all throughout the year. Going up means weakening in this case because the number of yen that can be bought with $1 US is going up, meaning the dollar is strengthening versus the yen, right? Obviously, we've been hiking rates. Japan, who's been reeling with crippling disinflation, a very unique problem to Japan, a very unique problem to a world superpower and a world economic power. They finally decided to raise rates. Notice that we are thinking of cutting rates. Japan is in a completely opposite picture. They're deciding to raise rates, and they decided to raise rates 6 days ago for the second time since 2007. Now, what do we know about rates from our own currency and our own situation? When rates go up, so does the currency, right? So when rates go up, currency goes up, and that is usually bad for stocks. So because that was the second time that it happened since 2007, and not a lot of people, I guess, were expecting it, the Japanese stock market absolutely tanked. Now, why does this affect us over here? Well, because there's something called the carry trade. You might have heard a lot of internet experts talk about this. Now, here's a very simple and quick way to describe the carry trade, and then we'll go back to the charts because I don't want to spend too much time on this. But let's say that you have the Japanese yen here, right? And the yen is very cheap. Interest rates, as you know, are very cheap. And you have, let's just say, the dollar here, right? So speculators will go out and borrow yen at very low rates. Remember, Japan only raised rates one time since 2007, and that was back in March. They will take this over to the US, exchange it for dollars, and then invest in, equities or US investments, take the profit from that, and then go back to the yen and exchange those dollars and those profits for more yen than they initially had. Now, this works all good and well as long as the exchange rate stays stable. But when the yen increases in value, this no longer works, and all of these speculators have to start closing their positions. And as I said, Japan decided to raise rates, and you can see here the yen strengthening, even though I know it's falling. But again, this is USD JPY, which means that you can buy less yen for your dollar. Now, because this right here is some form of arbitrage, it takes a lot of money to actually make money in this, right? Like if you have a $10,000 brokerage account, you're not going to really make any money off this. You need hundreds of millions, even billions of dollars in order for this to be worth it. The problem with arbitrage opportunities, though, is that, you are making incremental profits over time. But when it fails really hard because, like I said, it requires a lot of money in order to make significant amount of money from that arbitrage. So is this something to panic over, right? Does this change the fundamentals of Amazon? Does this change the fundamentals of Microsoft? Will this change the fundamentals of NVIDIA? In my view, no. As a matter of fact, because I'm old and I've been around the stock market for a very long time, this reminds me of a situation that we've actually seen before, right? Seen something very similar before. No, not 2001. No, not 2008. But something that, unless you are a real stock market aficionado, you won't be familiar with, was 2015. So in 2015, we had all-time highs, as you can see here, right? And then overnight, we had a flash crash, very similar to what happened last night. As of the time of this recording, it's August 5th. Very similar to what happened last night. We had a flash crash, and coincidentally, it was also a Monday in August. It was August 24th, 2015. Now, what was also very strange about this, a strange coincidence, is this flash crash was due to an Asian situation, not in Japan, but in China. I don't want to get into the details of that. It's not important. But the Chinese market collapsed overnight, and that caused a scare in the US markets. Now, funny enough, for those of you that remember 2015, we were at the top of the market here, right? This made an all-time high in the Nasdaq. But there were tons of recession fears because people had very bad memories from the 2008 great financial crisis. So a lot of people in 2015, including myself, go back and look at articles from 2015. People said that this was the beginning of the next recession. Obviously, we didn't hit a recession again until the 2020 pandemic. But what's interesting about this, and if we go to QQQ, we could see it better, right? This is the ETF that tracks the NASDAQ. We almost hit a bear market in QQQ. As a matter of fact, if we closed where we wicked in 2015, we would have actually hit a bear market. But during the day, we saw this decline get bought up, and we finally closed down 17% from highs. Now, this is very similar to the situation that we see right now, right? We had that big wick, and just a little bit more, we were 3% away from a bear market. If you take a look at this, right, we were almost 16% down from highs. By the time we ended up closing on the day, almost 14% down from all-time highs, right? So to me, nothing is fundamentally changed in this market. Yes, the situation in Japan, sucks in the short term that their stock market also crashed. But for the US and the US companies, nothing really fundamentally changed here. Now, there is a little bit of an unknown in terms of how heavy the carry trade is, that carry trade that I talked about before, right? It's unwinding, but there's little, it's very hard to track how big the carry trade is, right? How much money speculators have, how much money speculators, or how many position speculators are going to close on the carry trade. It's very hard to predict. You're going to see numbers thrown all across the board, right? So I'm not even going to try to predict whether the carry trade is over or not. But if it is over, or if it has subsided, if the worst of it has subsided, and this panic that was caused was because of that, then fundamentally what has changed? What's the emergency here, right? You're hearing people say, oh, Jerome Powell should cut today, do an emergency cut today, right? Even respected people like Jeremy Siegel of Wharton, who, I don't know, maybe he's just past his prime, but why would Jerome Powell cut today? That would undermine everything the Fed has stood for. Plus, it would actually make the carry trade worse, right? Because if Jerome Powell cut today and investors in the carry trade were relying on a strong dollar, if Jerome Powell cut today, the dollar would drop. It would make this whole situation worse. Moreover, it would undermine everything the Fed has said up to this point, that we need to see inflation subside to 2%, right? And what? The unemployment rate, fine, it came in hotter than expected, 4.3% versus 4.1. We covered that in yesterday's video, but that's still historically low. What is the panic here? What is the panic here that the Fed needs to actually cut rates ASAP to save the stock market? The Fed is not trying to save the stock market. They don't care. They don't give a shit about the stock market. So what is the panic here? I don't think the Fed is going to cut. I don't think they'll do an emergency cut. I think they're going to wait, as they said, until September, unless something in the US starts cracking, whether it's in commercial real estate or banking or something, right? Whether something in the US actually really starts breaking, I don't see the Fed doing an emergency cut. So in my view, this to me looks very similar to what happened in 2015. I remember this, and I was actually invested in NVIDIA at this time. But I remember this, right? I remember that waking up and being like, wow, the futures market in Asia really got hammered. Are we really going to enter a bear market after hitting an all-time high just a couple weeks ago, right? Same thing here. Same question here. Are we really going to hit a bear market after hitting an all-time high just a couple weeks ago? Obviously, anything's possible. Yes, we can hit a bear market. Yes, things can get worse. Obviously, anything can happen. But in my view and my reading of the situation, to me, this seems very reminiscent of something that we've already seen before. So with that said, what did I take advantage of? Okay, if I told you just 2 weeks ago, what would you do to have a chance to buy NVIDIA at $91? Most people say, I would cut my left nut off to be able to buy NVIDIA at $91. Guess what? NVIDIA hit $91 today. Did anyone buy? Well, aside from the fact that a lot of brokerages were coincidentally, this is a whole other topic, but Schwab, Fidelity, Vanguard were all acting up when these stocks were at very juicy buying opportunities, right? Is that suspicious? I don't know. But most of you would have given an organ to buy Nvidia at 91, right? A stock that was at 140. We're like, I just can't wait till it drops. All right. So is it a buy for you? Is Nvidia a buy for you at 35% down? What about Amazon? Absolutely crushed earnings, crushed cash flow expectations, right? What about Amazon? Is that a buy for you? You missed it on the drop after earnings. It dropped even further. Is this a buy for you? Amazon dropped 25% from highs. Is that a buy for you? Moreover, we absolutely struck gold with our bonds position. A lot of people were laughing about me saying that bonds are one of the heaviest things that I'm going to start positioning in for 2025 and beyond. I don't think they're laughing now. Bonds were definitely the right call, and I think they will continue to be we will get a retracement, and I think they will continue to be for the next 2 to 3 years. And funny enough, I actually didn't day trade today, even though, there could have been opportunities, but for me, I actually like to find positional trades and positional investments during extreme times like this. This is, for me, I'm not actually, one of these people that's looking for the most extreme volatility to day trade. Yes, I like regular volatility. I don't like 1,000-point moves in the NASDAQ, right? Where if I'm wrong and my stop limit is hit, I'm taking a much bigger loss than usual on a day trade. So surprisingly, I actually didn't day trade today, but I did go live with the team, shared my investment thesis, shared the things that I was buying, told them what I was buying. We all ended up picking up some of these stocks for very cheap. Whether they drop further or not, I don't care. Nvidia down 35%. Are you kidding me? Come on, man. Unless you think Nvidia is just a complete scam and what happened was a one-off. What about Amazon? What about Microsoft? What about the Qs? This is why we hold cash, folks. This is exactly why we hold cash. These are the times we want to deploy. If you want to trade live with me every single day and you want to get all of my investments and my analysis and my thesis up to date in real time, join us. Click the link below. Would love to have you. If not, no worries. You can wait for the late update in the video. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.